Okay, so the second example I'm going to do is Tesla on Friday the 25th of June because I want to use it with a specific trigger in mind. Since so many people that follow me are part of the Twitter trigger community, so to speak. So I'm going to pretend that I'm a bear on Tesla today, under this dark pool print that I have here labeled on my chart at 683.50. So I'm basically going to go under the assumption that I'm opening a put if it breaks below this point. Um, so that's where we're going to go. And then I'm going to set my stop loss at a close over this dark pool print, just for an example. We're going to use those as our levels. Okay, so the stock opens up, goes up and down, up and down, up and down. It gets to here, you look down, and it's a bigger red candle than the candle before it. So you look to the next for confirmation. This one's bigger red, there's your confirmation. You can potentially enter the trade early here. I'm not exactly sure at what point in this 5-minute candle it broke our level. But let's say we saw the volume coming up as it was coming down here, and it gets to like here, and it's still red. Occasionally I'll enter the trade early, but let's just say we entered right when we kind of passed this line on the way down this red candle. So we buy our puts immediately right at 683.50. We look to the next for confirmation. It closes red. Now this is an interesting candle because you can see for a period of time it was probably green. It probably bounced off this, got slapped down by these two moving averages above it, but it closed red. So the key to this strategy is you have to let candles close. Otherwise, it doesn't really work. Okay, so then we look to the next for confirmation or more confirmation. It's red, lower volume. The amount of volume at this point, as long as it stays red, doesn't really matter except to gauge it towards the following green volume. So then we come down to here and we get our first green candle in what, like 30 minutes, 20, 30 minutes. And this one's green. It's bigger candle than the one before it. So we look to the next for confirmation of a trend change. It's even bigger. It's also green. So at this point, if you wanted to exit on this candle, you could. And if you'll notice, it closed basically just under, which would probably make this more or less a break-even point, depending on what day of the week the option's open. So that's fine. If you get stopped out at break-even or whatever, that's fine. If you wanted to stay in it and go red on a trade you were green on, you're welcome to do that too. But oftentimes, once a trade goes a certain level of green, I'll set my stop loss back at break even. So worst case scenario, I get stopped out at break even and I'll re-enter if it re-triggers later. So I'm going to go under that assumption that that's what happens. So we're going to say we get stopped out on this candle. But we're going to keep watching it. So then we get green, green for confirmation, and it's bigger. Then we start to get this low volume pullback, but we get red confirmation. So we're going to look to the next one for follow through. Then we end up with basically a bullish, almost a bullish engulfing green candle of bigger volume. So we're going to be like, okay, let's see for the next one for more confirmation. Next one closes red, but it's low volume. Next one closes red and it's low volume. So at this point, I'm saying, okay, looks like our puts may come back into play. And we're still up. We're up here about a buck above our trigger. Then the next one we get is a bigger volume red candle, but basically closes right on top of our trigger. At this point, I would feel perfectly comfortable entering the trade based on this, the way you're reading this volume. Now we get low volume green pullback that, I mean, it's kind of a spinning top-ish looking candle. Then we get bigger red, look to the next for confirmation, bigger green, look to the next for confirmation. Then we get low volume pullback, but then we get confirmation of the red. So now we're like, okay, maybe we're going in the right direction. Maybe the trade will start working. Then we get a red on even higher volume, so we like that. Then we get green on even higher volume, and it's one of those big, all the way back up to the top kind of candles. So if we had already set our stop loss here, it may have knocked us out. I'm going to just go out on a limb and say It didn't this time because it happened a little bit faster and it wasn't quite as big a move. Um, but either way, if it does stop you out, you could re-enter at another point when the trade starts working in your direction. But we look to the next for confirmation and it's green, but it's low volume and it's almost a reversal type candle. So in this instance, we're going to stay, look for the next two for confirmation of the direction. Then we get an equal volume red, but we get confirmation. So the trade's now working in downwards. Then we get more red, more red, more red on increasing volume here. So we go, okay, that's still great. Our puts are going to start working. Then we get a big green, but it has a lot of selling pressure on it, that candle. So even though it's green, it's not a big deal. Then we get even more red, shoots it down, look to the next for confirmation, comes out, and it's red. It's again has a really big wick on it. But even if this one closed green, at that point it's a low volume pullback. But then we get another big red, followed by another big red. Then we get a green, followed by green for confirmation, followed by another green for confirmation if you were still in it. I would have probably gotten out of this trade at some point right around here, around 640, 674.7, excuse me, based on this confirmation and that type of candle after getting a big volume pullback right on another trend line it looks like that I have drawn. So that would have been my cue to get out, would be on this candle close. And we would have had a trade that got us from 683.63 down to 674.60, 674.70, somewhere around that range. So that's pretty good day trade. And it just kind of walked you through how I would use volume to stay in or stay out. Again, this is on a 5-minute time scale.